And welcome back. It's Jason Walter here. Thank you so much for joining me in today's video. I'm actually really excited to share today's video because this is based on my favorite one I make every single week based on my own analysis of Realtor.com's data. They actually just announced their latest weekly housing market update a few days ago. So in today's video, I'm going to touch on what's happening right now regarding home prices, housing inventory, new listings, price reductions, and of course, much, much more. And just like my previous videos I make every single week, I'm going to provide a summary at the end of this video, as well as some predictions of what may lie ahead, and also kind of like a summary as well regarding what has been happening with our U.S. housing market over the past several weeks here. So let's go ahead and dive right in. I don't want to waste your time here. So here's the report from Realtor.com. So just like my previous videos, I did not even read. Instead, I want to provide my own analysis of their data. So instead, go to realtor.com/research/data. Click on this link right here. It takes you to this information right here. So I'm going to talk about asking prices in the U.S., new listings, housing inventory, new listings, days in the market, and of course, the number of price reductions in the U.S. Some very, very big changes, especially compared to 1 year ago. And by the way, speaking of that, every single one of these metrics right here is actually compared to 12 months ago. Anyways, so for June 3rd, the weekend of June 3rd, asking prices only increased by 0.2% compared to the same week in 2022. I've been saying for about a month now that we should be seeing negative price growth for asking prices very, very soon. I was saying we're probably going to see that in May or June, but this number right here is likely to be negative year over year very, very soon. Also, as a note right here, this gain of 0.2% of asking prices in the US is the smallest increase on record. And by the way, Realtor.com's data goes all the way back until July of 2017. So the year-over-year increase of 0.2% is the smallest increase on record. Also, we've been seeing a huge decrease over the past several months because look at the end of March, as I say. The end of March, asking prices increased by 6.3%. Now it's only a gain of 0.2%. And by the way, for comparison's sake, when looking at the same week of 2019, the beginning of June 2019, we saw a gain of asking prices, an increase of 7.6% compared to only a 0.2% increase last week. One more thing I do want to mention regarding prices is that we've been seeing single-digit increases in asking prices ever since mid-December last year. So mid-December, we were at a gain of 9.8%, but ever since then, we've been seeing single-digit increases of asking prices now for 25 consecutive weeks. Okay, let's change gears slightly here and talk about housing inventory, or the number of homes for sale in the US, because last week that only increased by 12.9%. This is pretty astonishing because just about 1 month ago, the gains were double that. Because look at May 6th. May 6th was a gain of 31.4%. Also, as a note right here, this 12.9% increase we saw last week for housing inventory was the smallest increase since last June. Additionally, as I've been noting here, inventory levels compared to 12 months ago have been mostly on a downward trend ever since early February this year. This is due to a lack of new listings. In other words, it's not filling up the bucket of housing supply. So of course, if we want to see an increase of housing supply, we need an increase of new listings. And in fact, we're seeing just the opposite. On top of that, this decrease on a year-over-year basis for housing inventory, again, only an increase of 12.9% this week, but just about 1 month ago, it was a gain of 31.4%. The reason why this has been decreasing is also due to the fact that inventory was absolutely skyrocketing at this time last year. In contrast, inventory has been decreasing year to date so far this year. One thing I do want to mention as well is that inventory gains, according to Realtor.com, is actually very, very close to what Research.com is reporting as well. Because based on my nerdy Excel formula right here, we saw a gain of 13% compared to the same week of 2022. And by the way, this is absolutely crazy because back in late February, we saw a gain of 76% year over year. What's also wild as well is that inventory is down 6% year to date, which is entirely abnormal because when comparing levels in early June compared to January 1st, we should be seeing an increase of housing supply, but in fact, we're seeing just the opposite, down by 6% year to date. It's also worth noting that even though we have approximately 13% more homes for sale compared to 2022, we're down approximately 53% compared to the same week of 2019. Now, here's exactly what I mean by that, because according to Altos, we have approximately 443,000 houses for sale right now, much higher compared to 1 year ago at 392,000, and also back in 2021 at 341,000. But at 443,000, this is approximately 53% less than mid-June of 2019, when at that time there was just under 943,000 homes for sale. This means we're missing approximately 500,000 houses that are not listed for sale right now compared to the levels you saw back in 2019. What I'm trying to say, we have approximately 500,000 fewer homes for sale compared to pre-pandemic levels. And by the way, that number has been growing compared to 2019 because back in 2019, inventory was increasing greatly during the spring home buying season. This year, we're not seeing that though, because let me zoom in right here. So inventory levels to start the year were at approximately 471,000. Now it's only 443,000, a decrease of about 6% year to date. Now, having said that, inventory levels have been increasing ever since the end of April, but not the same rate we saw in years past. And of course, one of the main reasons why we're seeing a lack of inventory levels compared to pre-pandemic levels is this right here. New listings fell by 24.8% compared to 12 months ago, and also have been decreasing by double digits for 42 of the past 45 weeks. Absolutely insane. Also, we've been seeing fewer new listings for 48 consecutive weeks. So in other words, new listings have been falling for nearly 1 year, which is absolutely insane, which is one main reason why we're seeing a lack of homes for sale. Let's also talk about how fast or how slow homes are selling in the US right now. So last week, it took about 14 days longer to sell a home compared to the same week of 2022. So houses taking longer compared to 1 year ago, now for a whopping 44 consecutive weeks. However, having said this, this is the only column right here, or only metric here, that's a lagging indicator because this is based on closed home sales. Okay, let's change gears again and talk about the number of price drops compared to 12 months ago, because last week it actually decreased by 1.4%. This is actually the first time it's been negative ever since last March. Also, this is quite the turnaround as well, because in late March this year, we saw a gain of 105.4% in the number of price drops year over year. Now it's down 1.4%. And by the way, something I want to clarify, this 1.4% decrease year over year is actually the first time we've had negative changes compared to March last year of 2022, not this last March. Something else worth noting as well is that the number of price drops has now decreased in 16 out of the past 17 weeks. A very big change, especially compared to March this year, where we saw triple-digit increases. Now it's actually down compared to 1 year ago. These smaller increases we've been seeing for the past several weeks now is likely due to declining of housing inventory. In other words, fewer options for buyers, leading to bidding wars in some marketplaces. So in other words, think of an environment where we have a lack of houses being listed for sale. So when a house does get listed for sale, there could be a lot of buyers looking for a home to buy in that neighborhood. And so when a home does get listed for sale, in some markets, like in Sacramento, for example, we're seeing multiple bids for that house, even though we have rates around 7% right now. So because we have this anemic amount of houses for sale right now. This is actually causing bidding wars in some areas, and also is causing the number of price drops also to decrease compared to 2022. So that's number one. But also number two is at this time last year, in the spring months of 2022, inventory as well as the number of price drops was absolutely skyrocketing. This year is entirely different though, because the share of price drops has been relatively flat for about 3 to 4 months now. Now, speaking of that, here's the share of price drops according to altosresearch.com, because last week the share was 31%. This means that about 3 of every 10 homes for sale right now have already reduced their asking prices. But this is much lower than the 43% we saw back in mid-November last year. Also at 31% right now, this is much higher compared to the past several years, but it's on par with pre-pandemic levels back in mid-June of 2019. Also, it's been pegged around 29 to 31% for the past several months as well, even though it has been increasing ever since May this year. Now, speaking of the share of price drops, here's altosresearch.com. Again, the share right now at 31%, much higher compared to last year at 26%, and of course, much higher compared to the 18% we saw in 2021, and also the 24% in 2020. But at 31% this year, this is on par with mid-June of 2019, when at that time, the share was approximately 32%. Also, going back to the end of June of 2018, the share was also around 31%. All right, I know there's a lot to cover in today's video, so I want to provide a summary as well as some predictions of what may lie ahead as well. So number one, asking prices only increased by 0.2% last week, the smallest increase on record going back to at least July of 2017, as far back as Realtor.com's data goes. In comparison's sake, asking prices increased by around 7% compared to the same week of 2019. Number two, inventory only increased by 13% year over year last week, on par with what altosresearch.com is reporting as well. Something worth noting as well, which I've been talking about on the channel for quite some time as well, is that this year we did not see a seasonal uptick of inventory. In fact, we saw inventory down by about 6% compared to the first week this year. So inventory down compared to the start of this year, which is entirely abnormal. And the reason for that, as I mentioned, is a decrease of new listings. In fact, new listings have been decreasing by double digits for 42 out of the past 45 weeks, which is just frustrating to say the least, right? So we want to see housing affordability improve. We want to see home prices decrease for people who are looking to buy a house. But we're not seeing that because there's big problem of a lack of housing supply and, of course, a huge decrease of new listings. In any case, this continued lack of new listings is causing inventory to remain at historically low levels, going back to 2019, for example. Even though inventory is much higher now compared to the past couple of years, it's approximately 53% below 2019's levels. We're missing around 500,000 homes for sale compared to the same time frame in 2019. A very big problem if you want to see home prices decrease, right? Number three, average 30-year fixed rates are at 6.97% according to the Mortgage News Daily as of today, which is June 12th. Of course, that's for people with exceptional credit, of course, right? Around 7% right now for an average 30-year fixed. 1 year ago, it was 5.85%. Number four, the number of price drops compared to last year has decreased for 16 out of the past 17 weeks. Also, the share of price drops is at a 3-year high, but of course, it's on par with pre-pandemic levels in 2019, for example. Also, number five, houses are taking longer to sell compared to 1 year ago for 44 consecutive weeks. Again, though, this is a lagging indicator of our U.S. housing market. So what are some potential huge changes ahead, given the fact that rates have been skyrocketing ever since really, last year, really? In any case, rates around 7%, it's going to cause a lot of headwinds for homebuyers right now. Number one, Average 30-year rates are 1.1 percentage points higher compared to 1 year ago, which causes a 11% decrease in buyers' purchasing power. Of course, there's a lot of challenges that home buyers are facing right now due to record low housing affordability, low inventory levels, historically speaking, elevated rates, as well as the potential for recession later this year. Maybe. We'll have to see about that. And of course, a lot of uncertainty in our U.S. housing market and our U.S. economy as well. Number 2, housing affordability is a huge hurdle for home buyers, especially compared to the past couple of years. So rates have more than doubled compared to 2020 and 2021, when average rates were around 3%. And on top of that, the median sold price has increased by about 40% compared to the same time frame of 2020. So rates have more than doubled, and also home prices have increased by about 40% on a national level. Can you say not sustainable? Anyways, mortgage rates increased in May, and on a national level, home sold prices have increased by about 10% ever since February this year, according to my own analysis of Redfin's data. In other words, like I said, rising rates and home prices making housing affordability worse than it already is. Number 3, early signs of home buying demand have been absolutely all over the place due to the volatility in rates so far this year. The most recent stats we have show that applications for home loans to buy houses, according to the MBA, as of June 7th, is down by 2% compared to the previous week, but also has decreased for 4 consecutive weeks. Also, when looking at pre-COVID levels, their purchase index by the MBA is on par with the lowest levels going back to December of 2014. In other words, we have this housing market, we have low supply meeting low demand, making it feel like this housing market's competitive, when in fact it's really not. It's really due to the fact we have a lack of homes for sale. Also, Redfin's most recent data shows that pending home sales decreased by 17% from 1 year ago, and also new listings fell by 25%. The National Association of Realtors, or NAR, also reported on May 25th that pending home sales were flat in April, even though interest rates decreased in April. So pending home sales were flat month over month and were down 20% year over year. It appears our housing market is highly rate dependent, so the data coming in is ever changing. And of course, a friendly reminder, real estate is local. Number 4, sellers and buyers have exited the market, leading to a dip of new listings, as well as contracts being signed for existing houses as well, especially compared to the past several years. This lack of new supply since last summer, again, nearly 1 year of decreases of new listings, which is just absolutely insane. This has led to inventory remaining at historically low levels, down approximately 54% from 2019. If homeowners continue to decide that now is not a good time to sell a house, that will limit housing inventory. The direction of our U.S. housing market will depend on rates and inventory levels, in my personal opinion. And number 5, this is a big one. I appreciate you guys supporting my YouTube channel and also for watching today's video. Hope you guys have an awesome day, and I look forward to seeing you on the next video.